Hello everyone, so this is my second Super Investor Trade episode. So in today's video I'm going to be showing you what Warren Buffett has bought. These are the latest Warren Buffett buys, and I'm going to be going into the reasons why he could have bought these, and do let me know in the comments what you think about these, and if I've left out anything. So I have a list of super investors that I'm trying to follow, and today we're going to be concentrating on Warren Buffett, but in my next videos I'm going to be going into Monish Paparai's buys, Lee Lu, who manages Himalaya Capital Management, Chuck Akre, who is managing Akre Capital Management, Guy Spear, who is Monish Paparai's friend, who is managing Aquamarine Capital, Bill Nigren, who is managing Oakmark Select Fund. So all these are super investors, and I'm quite interested in what they are buying because this is smart money, and whatever smart money is buying is obviously something that will have a very, very good support in terms of price movement. If a lot of institutional investors are selling out, then a stock might not hold out in terms of price performance. So Warren Buffett has made several additions to his portfolio. He has made the following additions: so Domino's Pizza, Corp, SiriusXM Holdings, Verisign, Occidental, and Constellation Brands. So these are the companies that Warren Buffett has bought recently, and he's also reduced quite a number. Bank of America being one, Liberty Media being one, New Holdings. I was quite excited about New Holdings a while back, but it seems like I think it has reached a point where the runway is quite short in terms of where it's going from here on. So I'm going to go into detail about why Warren Buffett could have bought these stocks that he has bought, and feel free to comment why you think he has bought, and if you think I'm wrong, please pop in a comment and give me that constructive feedback. Domino's Pizza, it's got quite good brand strength. It's a good brand. They've got dominant global brand in pizza delivery and strong customer loyalty. They've got a franchise model which is asset light, and if you know me, you know that I always go for asset light businesses because it's easier to get a high return on capital, a high return on equity if the business is asset light. If the business is asset heavy, you will then require to do a lot of borrowing, and that leverage adds more risk to the business. And then there's consistent free cash flow, and this obviously increases the intrinsic value of the company. And once that happens, this means that the intrinsic value will likely be higher than the price at which the company is selling it. And then there's long-term growth, which is international expansion and digital ordering, which provide ongoing growth opportunities. And then Corp, this one is a company that deals with outdoor and swimming pool equipment. So they actually do installing the pools and the maintenance of the pools. They're the largest distributor of pool supplies with strong distribution networks. They've got over 200 brand distribution branches. So they've got a moat through scale, economies of scale, which make it hard for competitors to match cost efficiencies. They've got resilient demand, which maintenance and repair needs create recurring revenue streams for them. They also have strong financials, a healthy balance sheet, steady earnings, and high return on invested capital. The only downside is that they are quite a cyclical business because they depend on interest rates and the housing market. Then you have SiriusXM, used to hold this one. They have a monopoly position in sole satellite radio providing with exclusive content. Undervalued, low price to earnings and price to sales ratios, which indicate deep value. I haven't quite understood why Warren Buffett has gone for this one, to be honest. Time will tell. But yeah, they've got recurring revenue, subscription model, offer stable and predictable cash flow. They've got strategic media asset, which is potential synergies with other media holdings and advertising platforms. So this one I will probably keep an eye on and keep watching to see what Warren Buffett is seeing in this company. And if you have any idea, or if you know why Warren Buffett could have gone for this, just pop it in the comments down below and we can have a discussion on that. There is Verisign. Verisign, this one was quite appealing to me when I was doing my research. It's a company that does internet infrastructure, and they've got quite a huge and deep moat. They operate the .com and .net domain registries under long-term contracts. So they've got high margins, which is exceptional. They've got exceptional operating margins, which are like 56%, and their business is capital light. So that's quite good. They've got a stable revenue, which comes from contracted recurring revenue from domain name services. And then this is quite good in terms of competition. There's practically no direct competition in core registry services, so they're almost like a monopoly in that sense. So this is quite a good business. And then the next one is Occidental Petroleum, which is one that I own. They've got strategic energy assets, strong position in the Permian Basin for low-cost oil production. They've got high free cash flow, which supports debt reduction. They've also reduced their debt quite a bit in the last couple of months. They've got carbon capture technology, and they're a leader in that, which aligns with long-term energy transition. They've got energy security bets, which they believe in sustained importance of oil and gas despite clean energy trends. So Warren Buffett thinks that oil and gas is going nowhere, even though we've got electric vehicles coming up. And then the last one is Constellation Brands. They've got premium brands, and you might have drank this alcohol beverage called Corona. That's a beverage that they actually make. They've got demographic tailwind, strong appeal amongst US Hispanic population fuels growth. They've got a wide and efficient distribution channel, which enhance profitability, and they focus on higher margin beer and spirits, divesting weaker wine segment. So this is quite a good buy in my opinion. So to put it all together, my favorite buys here would be Domino's, Corp, Verisign, Oxy, and Constellation Brands. SiriusXM is one to keep an eye on. I honestly think that I haven't looked deeply into it, but I will look at it very soon, and I might do a video on that. So when I do, I'll probably understand more into why Warren Buffett has gone for this. I'll look into it, and if you want me to do a video on it, just put a comment down below. So this is me signing out. Bye.